I've been trading the ORB strategy for the last 7 months, and in that time I have tracked every trade. I frequently test out ideas to improve it. Some of them work well, others not so well. Now that September is in the bag, I'm going to share my results for the month and talk about some more ideas that I've got to improve this strategy. Here's how the bot performed in September. It took 9 trades in total, which is not a huge amount from 22 trading days, but I would rather my bot took a few good trades than chase a whole bunch of marginal trades. Out of those 9, 4 were winners and 5 were losers, giving me a 44% win rate, which is on track with my previous performance. To balance this out, the average winner is bigger than the average loser, and my system achieved an RR of 1.57. Overall, I had a gain of 1.9% for the month. It's not a huge return, but this is now 6 profitable months out of 7, and I'm quite happy with the slow and steady results of this strategy. I know a lot of you also trade the ORB, so let me know in the comments how you did this month. Now let's have a look at the trades that I actually took in September. Things actually started off poorly. My first trade came on the first day of September, and unfortunately it was a losing trade. I got in right around here, and initially it was looking okay, but then the trade just completely ran out of steam, went against me, and I got stopped out down here. If you're not familiar with this strategy, then let me just quickly recap the trading rules. This is the 15-minute ORB, which means that I traded on the 15-minute time frame. This is a breakout strategy, or specifically it's the opening range breakout. And the opening range it's referring to is market open in New York. So firstly, I need to make sure that my candles are on the correct time frame, which is UTC -4 New York. Once I have that, I look for the market open candle, which comes at 9:30. So let me get rid of this rectangle here and show you the 9:30 candle. So it's this big green one here. I wait for this candle to close, and once it has, the high and the low gives me my opening range. And I can mark out the high and the low here with these horizontal lines. Once I have this range defined from my first candle, I then wait for price to break outside of this range. And the breakout actually came on the very next candle, which was this green one here. It opened inside the range, broke through, and then closed up above. That part is important for my strategy. Everyone trades this a little bit differently. Sometimes the candle can open inside the range, break out, but then come back down and close inside the range again. There's different ways to trade this, but I personally don't trade those signals and I wait for that confirmation. In my case, the confirmation comes from the candle fully closing outside of the range. And that's exactly what this candle here has done. It's closed up above and that's giving me my confirmation. So at that point, I immediately open a trade. It will go at the open of the next candle with the stop loss at the bottom of my opening range. I then target a 1.5 times take profit ratio. And you can see that unfortunately on this one, the trade went against me and it got stopped out. There is another rule, which is that I don't enter any trades after 12 p.m. So all of my trade signals have to come before that point. This is based on my backtesting, and I found that trades that open in the morning tend to do better than the ones that open later in the afternoon. I also have a filter for the minimum and maximum range size, but I'll come back to that later on in the video. So that's my first trade, and it was a loser. And with that trade, the month was not off to a very good start. The next day, on the 2nd of September, there was a trade signal, and again, it was a very similar one. I had my opening range, and then immediately the candle after that broke through, closed above, and that gave me my confirmation to enter. But I didn't take this trade. And the reason was the min-max filter that I just spoke about for the size of this opening range. What I use is the ATR, the average true range indicator. This tells me how big the recent candles are compared to the previous candles. And I use it to filter out the size of this opening range. This filters out the ranges that are either too small or too big for my strategy. I have a separate video on this, so I'm not going to go into detail on it, but I'll link that in the description if you want to see how that works. But regardless, my bot skipped this trade, and it was good that it did because it immediately turned around, went against me, and would have stopped me out. So I now avoided a losing trade. Unfortunately, no such luck on the 3rd. I had a breakout here. It looked really strong, started way at the bottom of the range, broke all the way through the whole thing, closed above. I got in on the next candle, initially showed some positive momentum, but then just went against me and stopped me out here. My luck changed a little bit the next day, on the 4th of September. I had to wait a little bit for this breakout to come. So there was the initial opening candle, then I had 1, 2, 3 candles before the 4th one finally broke out. And to be honest, I can barely even call this a breakout. Let me just zoom in a little bit to see what this actually looked like. Although the candle did go quite high up initially, you can see that it retraced quite a lot and then closed barely above the opening range. But my trading bot doesn't have emotions. It just follows strict rules. And the rules are, if the candle opens inside the range and closes above the range, even if it's 1 pip, it doesn't matter. That is a trading signal. And it's a good thing that the bot does follow the rules so strictly, because it got in on the next candle and it went on onto my take profit. So that's 3 trades so far. 1 winner and 2 losers. And unfortunately, the next one wasn't a lot better. The market movement was generally pretty choppy, and this trade got caught up in that. I had a pretty nice breakout. Initially, things looked okay, but then similar to the first trade, things turned around and I got stopped out pretty quickly after that. The bad form continued a couple of days later. On the 10th of September, I had another losing trade, and this one also looked pretty good. There was a really strong breakout, but as soon as I got in, it just turned around and it was red candle after red candle until I got stopped out. But the next day, my fortunes changed a little bit. I had a pretty small opening range. I think this was probably just on the limit of my ATR filter, but it was big enough to trade. There was a really strong breakout candle and I got in on the open of the next one. Price initially moved pretty strongly, although it did then kind of stagnate for a while before slowly drifting upwards and hitting my take profit. I then extended that winning streak on the 15th of September with a second win in a row. The setup was very similar to the previous one, although the opening range was maybe a little bit bigger, but it started off with a really strong breakout candle. I got in on the next one. Things didn't look great to begin with, and in fact, I almost got stopped out down here. So maybe I got lucky on this trade, but either way, it then turned around and drifted up towards my take profit. Unfortunately, this one went overnight, so I actually ended up paying a small amount of financing as a result, which is frustrating because it eats into any profits that I make. I then had to wait a whole week for my next trade, but this one extended my winning streak to 3 wins in a row, and this was pretty much a perfect trade. Every single candle here was green, except for the very last one that hit my take profit target. But if I could somehow figure out what makes this trade different to the others, then my strategy would be significantly improved. But I have a feeling that's much easier said than done. I then had to wait another week for my final trade of the month, which was very anticlimactic. The breakout was all over the place with these funny candles that have more wicks than bodies. Eventually, I got a breakout, got in on a trade here. 2 candles after that, got stopped out again. This was a disappointing way to end the month, but overall, my winners were greater than my losers, so I came out with a profit. I sometimes get comments asking about my win rate or why I only aim for 1.5 times reward to risk. And when I see trades like this, I can certainly understand that question. But the main reason I use this is because I backtested many different take profit ratios, and 1.5 times gave me the best result in terms of overall profit. There's always a temptation to aim for bigger take profit targets, and we often see trade screenshots like this, which look great, or you see bold claims like 90% win rate. But take profit and win rate are inversely linked. As the profit target increases, the win rate decreases. I previously traded a breakout strategy with a 4-to-1 reward to risk ratio. It was great when it won, but that didn't happen very often. Most of the time, the trades were losers and it had long losing streaks. That might work for some, but for me, that was unsustainable psychologically. So the 1.5 times reward to risk with a 44% win rate is the sweet spot for me. Of course, if I could improve one of those values without negatively affecting the other one, then that would be great. And that is my aim with all of these additional backtests that I do. I finally got around to testing the breakout, pullback, and continuation pattern, but unfortunately the results were not what I expected. I'll link that video in the description too if you want to check it out. That backtest did give me another idea though, which is to focus on the breakout strength instead. That way I could try and avoid the fakeouts and catch more of these powerful breakouts. I'm not sure exactly how I'll measure this yet, but some ideas that come to mind is using candle volumes together with the candle price action, or maybe even the candle size itself. So does a bigger candle perform better than a small breakout candle? Or potentially even using a tighter stop loss. That way, if the trade is strong, then it just takes off and I don't need a big stop loss. But if it's weak and it turns around, then I don't give back too much. I have to be careful though, because some of these features exist in winning and losing trades. For example, this trade looks great. It started with a strong breakout and it carried on to the take profit target easily. But this trade also had a really strong breakout candle, just like the other one. The only difference is as soon as the bot entered, things turned around and went the wrong way. So I need to make sure that the filters I use are able to reduce the losing trades without reducing the number of winning trades. Let me know in the comments if you have any other ideas for measuring the strength of the breakout. I'll try and test out as many of them as I can and I'll share the results. To make sure you don't miss that video, hit subscribe to get notified. And if you want to see the full details of this existing strategy, including the backtest, then click on the video on the screen.